Welcome to AGORACOM Small Cap Stock Picks TV. I'm George Tsiolis, the founder of AGORACOM. It's January 14th, 2015, and with me, as always, our chief market commentator and soon-to-be rising star with a brand new hot contract signed, Allan Laboucan. Allan, say hello.
Yeah, George, well, I'm just working on being famous. Rich and famous I haven't really figured out yet, but I'm going to look after the famous part first.
Well, give us the details. You've struck a TV deal.
Yeah, well, George, over the years I had been on BNN a lot, but it kind of dwindled down a couple of years after Pat Boland left. Pat Boland with the mustache everybody knows about. And Pat and I had many great conversations on BNN over the years, made a lot of really good picks back then, and he'd left BNN to be at Sun News Network. And recently, Pat and I had been exchanging some emails, and I asked if he wanted to hear some of my latest thoughts on what I'm seeing in some trends, and he invited me back on. And not only did he invite me to come on this Friday show at 9:30 Pacific Standard Time, 12:30 back east, I'll be on every second Friday as well. So it's a recurring role. I'll be on for about 10 minutes. Pat and I will be talking about this market. It's called Market Watch, and yeah, I hope you tune in for it. It'll be a lot of fun, and we'll try to talk about some good small cap companies on there.
All right, and it's Sun News Network, so I'm not sure everyone's watching this across the country in Canada, so I can't tell you. You just have to look it up, Sun News Network. But congratulations, that's great. Also, we're going to be in live. We're taking our road show. We're taking our show on the road, baby, and talk to people in person. Where are we going to be this weekend? We're going to be Vancouver. Why don't you give everyone the details?
Yes, and after we do the Vancouver one, don't forget we'll talk about my new blog at AGORACOM. Yeah, we'll be this weekend, this Sunday. We'll be at the Vancouver Resource Investment Conference. The handle for it this year is VRIC15. I like that handle. I think it rolls off the tongue a little bit easier. And nonetheless, I'll be the speaker at 2 o'clock. There's a diamond panel. I'll be spending some good time talking about diamonds, what I look for in diamonds, the kind of diamond stocks that I'm following. And then we also have a booth there as well. It's 1811. So that's our booth for Sunday and Monday. George and I are going to use it as our sort of meeting area. Home base. So if you can't find me at the booth, I'm going to leave some of my cards around there. My cards all have my business or my cell phone number. So just give me a shout or drop me a text, and I'll circle back to see you at my booth.
Or just crank call him if you don't want to. Take his number and crank call. Finally, you're going front page. Big week for you, man.
I know.
TV, roadshow, and now internet. You're going front page. AGORACOM has given you the front page status. What's going on?
Yeah, well, you know me. I'm a multimedia kind of guy. Hey, George, I'm all over. It's content these days, and you got to be all over the place. And I've tried to be that for the last 4 or 5 years when it comes to the mining sector. And George and I hooked up about a year and a half ago, and we started doing these shows. I joined as the chief market commentator of AGORACOM, and now he's rewarded me after a year and a half of working in the salt mines, pounding away at the content. He's finally honored me with a blog on the front page of AGORACOM.
And for everyone, and all kidding aside, just get you want to hear what Allan, you're on the road. You can't check Twitter. You may not be able to check email. Just get to the front page of AGORACOM. You'll see his blog there, just right in the middle of the page. Right dead smack in the middle. I'm on the right side. He's in the middle. I don't know how that happened, but you'll be able to access it anytime. These shows will be there. His picks will be there. His commentary, even his Twitter, a link to his Twitter account will be there. Everything. So
it must be.
We're very happy with that.
Really good-looking guys in the center of the page.
But if we needed to give you the center of the page so you could fit, all right? All right. Let's move on to the markets, because let's move on to the market. So the big talk between you and I this week, we don't have a ton of stock picks. In fact, we're going to talk about 4. But we got some real themes that we want to shoot through, judiciously here, and that's the U.S. dollar and oil. So why don't you talk about the U.S. dollar, and I'm going to parlay that over to oil. So what's going on with the U.S. dollar? What did you see? And then I'll tell you about the specific action I took today that I announced, and already making money on it.
Sure, yeah. I've been looking at, recently I've been doing a fair bit of homework on the charts on the US dollar against all the major currencies, the pound, the euro, the Aussie, all the big ones that it trades against these days, and I was seeing a consistent pattern, and you can also see the same pattern in the US dollar index. And what I was seeing is every one of them has hit a top, and is now starting the phase of rolling over as far as I'm concerned. And it was without, it was they were all the same. Even the yen, which fundamentally doesn't have a lot of reasons for me to want to be owning yen, but I'm seeing something there that I think the U.S. dollar has topped out. It's been a really crowded trade for a really long time. And, for a spike to last for almost 6 months, George, which is what the U.S. dollar has done, it's just too much, and I think it's time to start rolling over and trading to the downside.
And on the flip side, U.S. dollar, oil. All right, so oil's been taking a tumble. Everyone knows it. $100 and change down to 45. I called 47.50 as a short-term bottom. Said it would bounce and then retest, so it retested, and now it seems like it did that little overshoot. That happens sometime. I'm okay with that, and it ended up somewhere in the low 45s, and that's when I posted this just the other day. Somebody put this up for everyone to see.
Oh, that was your tweet the other day. Yeah.
Yeah, so the first one was getting giddy to begin trading oil. The bottom is very near. It will provide plenty of volatility to trade. USO, XLE, and other ideas are welcome. USO, for example, is an ETF, and if you want to go long oil and you don't want to make specific picks on the specific oil companies, you go USO. It's oil and gas and energy, but predominantly oil. So that's what I put up. Now, why did I make this call? For two reasons. A, what I just said about oil there, so I don't have to explain that anymore. Technically, I'm looking at technicals. It doesn't the gut feeling, because people had gut feelings at 90, 80, 70, 60, 50 and got wiped out. So I've been looking at technicals. It's getting oversold. Second thing is,
to your handsome face again, George. We're still looking at that tweet.
Yep, and then I'll put up the other one then.
Oh, okay. Okay, sorry.
Can you see this one? I just did it change it on the screen share?
New position in USO. Yep.
All right. So then that was 2 days ago. Today, in the morning, I put up at 9:52 a.m. I started a new position in USO, starting to build USO for two reasons. One, oil is too cheap, and then two, I go and talk about the dollar. So I bought the first one at 17.60. I said I'd buy the second one at 17.20 if it got there, or 18.20 if it got there. Well, it got to 18.20. I bought position number 2, so my average cost is 17.90. It closed the day 18.27. So I'm up 37 cents already on those shares, and in fact, after I was trading 18.50. So I'm very proud of myself. Now, why to do this? Let me go.
First of all, I have a question, George. Is this a long-term swing trade, or is this your usual sort of shorter-term situation?
I think the first move is never the best move for so it's not something going to go from 45 back up to 90. That's not going to happen, or highly unlikely. I think it goes 45, 47, 49, 50, low 50s. Because it's gotten a little bit ridiculous. People will start low 50s, and then we'll have a retest. So my plan is to move out of these positions when West Texas Intermediate trades somewhere in the low 50s.
So maybe a week, 2 weeky kind of play.
Depends. That I can't tell you, but that's what I think is going to happen. And then it's going to retest, and then I'll buy heavy again, most likely, and then really ride it out the second time. So why do we do it?
Hold on, George. For our viewers, there's a couple ways to play this. If you like that angle, you could just buy it and hold it and wait. Don't worry about that next trend. If you're a little more aggressive on this trade like George is talking, then you're going to trade around the position. So you're going to look for that run up, that bounce to get a little too enthusiastic, and then let it trade down to test that low again. and then George is sounds like he's gonna start loading his boots, as they say.
Yeah, yeah. And now, why are we doing that? It's not because we just feel oil. So here, the canaries in the coal mine. This is what we want to teach people, right? What Allan's already told you what he's seen in the charts. So we're not going to go over that part for the dollar. So let me put the fundamentals behind the dollar. Here's a couple things that we're seeing. First, the U.S. 10-year traded below the yield on the U.S. 10-year went below 1.8% today. If you're an AGORACOM member, follower, if you're watching the show, you know that Allan and I have been saying an interest rate hike is a joke. It's not going to happen. And that was when the 10-year was at 2.8, 2.7, 2.6. We said, I posted a million times.
My argument is pretty simple. I've got 18 trillion reasons why I
just can't do it.
The country has $18 trillion in debt. You start raising interest rates on $18 trillion in debt, and you got problems. Real quick.
And that's what the 10-year is telling. The 10-year is telling you rates aren't going up.
Now
right? People should be selling bonds, anticipating rates are going to go up, which makes the yield much. Instead, they're buying bonds. They're not afraid. So that's telling me clearly the market is saying that's going to happen. Two, copper today hit a multi-year low. Why? There just isn't enough growth. We've all known it.
Hey,
Allan and I have been telling all of you.
George,
hold on, Allan. Hold on.
Okay, sorry.
Allan and I have been telling all of you. That don't look at the jobs numbers. That 5.8% and 5.9. It's artificial. It's not real. It's because most people have left the workforce, and that's only the employment number for the people left behind. You've seen us put up stats saying that income isn't growing. So if people aren't working and income isn't growing, there won't be inflation. There's no train to stop where the U.S. Fed has to raise rates to, hey, let's slow down this growth. It's not happening, and I wish it was, because at the end of the day, we'd all be better off if things were growing. But it's not. So what does that mean? If no interest rate hike, if there's no interest rate hike, that U.S. dollar is going to give back a lot. And maybe Allan, you can talk about that. A lot of the gain that it's made in the last 6-7 months. That means it's going to get cheaper. Oil and gold are going to be huge beneficiaries. That's the bet we're making, and I started off by doing USO today because I think oil is way oversold, so that's the easiest one to play. Go ahead, Allan.
A lot of people look at at gold as a currency. I try to keep it on the commodity side, so I'm looking at supply and demand all the time. But if you're looking at it as a currency, it's the strongest performing currency in the last 6 to 8 weeks now. 6 weeks. 4 to 6 weeks.
And explain that to everyone, because gold has been on the rise despite the fact that it's getting more expensive to buy.
Yes.
I think with a climbing U.S. dollar, there should be less demand for gold, and it should be going down. But even with the dollar climbing ridiculously, gold, and I tweeted that out a couple of nights ago, where I said gold is breaking through some important levels. I'm not convinced yet of a major breakout, but it looks like it's trying to sneak up on everybody. So I'd be very careful. I'm not bearish on gold anymore. I'm not bullish yet.
George, it's kind of I'm going to coin one here. It's kind of a stealth recovery.
Yeah. Where have we heard that before? So that's recovery. So let's end it there and say you've got some pretty good ideas on what.
Well, actually, George, I got another catalyst that's starting to develop here just in the last couple of days that I wanted to ask you about. What do you think about this scenario, George? You know that I was skeptical that they would even stop the 10 million. Remember when they were buying 10 billion of bonds a month, and they stopped that?
The last phase of QE, the very last.
Yes, I thought that was that they wouldn't stop doing it, that they would keep on doing it, that we would have to do it. Well, I thought what happened was their recycling of their bonds, because even though what you understand is they were still putting 10 billion new in every month, but the ones that they had been buying since 2008, they just recycle those, okay? And so that was enough to keep it okay for the last 4 or 5 months. But now we're running into a problem. Just like you said about the 10-year, the yield curve is starting to flatten. Not only do I think they won't raise interest rates, I don't think that they'll let the curve flatten. And so if they can't, how else are they going to stop letting the curve from flattening? They can't just keep recycling their bonds. They got to start another round of QE asterisk. That's my new thing.
I got to admit, I mean, I haven't thought about that deeply, so I can't give an opinion on that. But I think you're closer to the truth than this farce out there that things are going to return to normal and interest rates are going to start to rise, and you're going to have low short-term and higher longer-term rates, and the way it should look normally. It's a mess, and you just can't buy it. You can't make. You have to know that when you invest in stocks. That's what Allan and I are trying to tell you. You have to know that. And I'm going to give you a quick theory. By the way, you and I said it on the phone yesterday, so I want to say this in a minute about oil. I want everyone to think about this, because this is the way the world works. I'm not a cynic. And if anyone's watched the show for the last year and a half, I'm not a cynic. I don't really buy into it, but I also know there's a way the world does work. And if you think it's a coincidence that oil was hitting $150, $160 at the end of the Bush presidency, making all his Republican friends happy, making them all rich, they're all going to donate, which means they're all going to donate to this campaign because they know they're going to be a dogfight against Obama in 2008. And if you now think that while Obama's in the White House, that oil is at a multi-year low at the latter stages of his, if you think that's a coincidence, you just don't understand how the world works. So we know why Bush did it. Now, why is Obama doing this, and what does it mean? Well, Obama's doing this because he needed to gain some political strength. How do you do that? I'm going to beat up Russia, the Russian bear, right? He's got no ground game at home. He's got to go international. He protects Assad. The American protects Assad. The Americans protect the Saudis. They put the pressure on the Saudis to say, hit them hard. You just got to do it. Take one for the team. We know. You really think all this jawboning about the Saudis want to take the American and the frackers out? That's ludicrous.
Peanuts. It's bullshit. On the grand scheme of things,
they're not going to lose $50. Yeah, they're not going to lose $50 a barrel, but they got to do the short term because, hey, you got to play. When the Americans protect you, you got to play. So they're doing this. It looks like what they're doing is they're punishing Putin, who, by the way, has been shorting oil all the way down and laughing all the way to the bank. This guy isn't worth $40 billion because he's an idiot. Trust me on that. Part two, it also helps the Democratic Party going into a very important year and knowing what's going to be happening in 2016, right? Fundraising is going to begin. You hit the Republicans where it hurts them most. Oil, right? It's a tremendous hit to their pocketbook at the end of the day, and also makes him look like a superstar, because what happens? Oil drops. You start having shale oil projects shut down. You start talking about big oil projects not being economic, which helps them politically with the environment. So when you take all this into totality,
well, it doesn't hurt that you get cut at the pumps.
Helps. Yeah, and it helps the people a little bit too. They start seeing great effects. What I'm saying is, I don't care what oil does in the next 3, 4, 5 months. It's going to be volatile. It isn't going back. It's going to be volatile. But when it finally decides that it's had enough of this monkey business, because I'm going to tell you right now, the Saudis somewhere around September, October are going to say, all right, we've had enough of this. There's not much the fundraising that can be done to hurt you in the last 2, 3 months. Watch oil start to make a definitive move in September, October, and if Bush 3 wins the election, because it looks like Jeb Bush wants to run, if he wins, gold gets to $100 in a hurry.
100?
Right?
Gold?
Sorry. Yeah, I'm sorry. Oil.
I'm coming through the screen, buddy.
Oil gets to $100 in a hurry, in a flash. So I'm going to leave it at that.
Actually, I'm a little more bullish short term based on just simple supply and demand, George. It's just how long can these guys? The average cost of producing a barrel of oil in the world is $80 a barrel. How long can these guys go with less than $80 a barrel?
Yeah, because they can't remember. They can't just stop on a dime, right? They've got production, they've got commitments, they've got contracts. So it'll take some time. Eventually, they'll have to start shutting stuff down and to force the market back up. And like I said, when all else fails, count on people's greed. You can always count on that 1,000,000%.
Well, that's,
Bodies
George,
are
why I'm
not going
always looking.
to sell
That's why.
oil for $40 for $45 for very long. They're not going.
Why? That's why I'm always looking for crowded trades to go contrary to. The crowd is never right.
All right, let's move on to some picks here. And you're totally right. They're never right. So let's move on to some picks. Let me do a screen share for everybody.
Do you want me to talk about a recent change that I've done for the first time since I started writing my newsletters, George?
What's that? What recent change?
Well, I'm ready to now talk about a #1 pick. Something I've never done before.
In 10 seconds. In 10 seconds, I'm going to say on the watch list, BSM Technologies. All of you know I bought that in the low 1 teens here.
Well, you're kind of getting rid of my mystery, bud.
They're not there yet.
Right up on the screen.
I sold it over 150. I said I'd be back. Watch this. If it gets here, you can pretty much pick it up. I'm going to wait a little bit, but that's on my severe bottoming list. Now, drum roll, please.
All right. Yeah, you're going to do the actual drum roll for me there, George.
Hold on. Let me get some special effects going.
All right. I can hear the ding ding going on. Yeah, folks, it's not going to take us long to get. We only got 4 stocks to talk about. George is kind of pre-releasing one of my stocks. All right, folks, after being in the newsletter business and commentating on the stock market since 2005, it's 2015, and it's the first time in my career that I'm actually going to have a #1 gold stock pick. Over the years, I've been asked many times, what is my #1 pick in gold? My standard answer over the years has always been that I try to make all of my picks my #1 picks in gold or any other sector that I follow closely. But this case, this is such an overwhelming story to me that I'm quite comfortable. If people asked me tomorrow, Al, you can only own one stock, one gold stock for the next year or two, which one would it be? I have one of those now, and that's why I'm comfortable saying that I actually have a #1 stock pick. George has it up on the screen there. It's Rubicon Minerals, Inc. RMX is their stock symbol.
On the TSX?
Yep. Tell me what you see in the stock chart there, George, and then maybe I'll talk to you about what I like about the fundamentals.
First thing I like about Rubicon, you guys know I always talk about this, is liquidity. It trades 850,000 shares a day on average. At $1.27, that means it's doing over $1 million a day, which is great for everyone at home because you don't get stuck in something. Now, taking a look at the chart here on the right-hand side, I'm seeing a potential breakout right now because it broke through its 9-day, it broke through its 50-day, and now it's just broken and sitting above its 200-day. So we got some real potential. I like this trade. I'm seeing higher highs and higher lows over the last couple months, which has been very difficult for most of these junior gold companies. I feel very comfortable with this pick. I'm not talking about forever because only you know that because you're the guy who has a long-term fundamentals. But you could sit here and put a stop loss on it of I'd put a stop loss on it of $1.05. Easily, very comfortably, somewhere in there. Otherwise, if Allan says let this thing run, let it run. So Allan,
actually, I'm even more bullish than let it run. I'm also not one to say that buy the dips and kind of guy. But I think that this is also one that you can trade around a position and buy the dips, sell into the the rallies. And then buy into the dips, and with the confidence that those dips are going to continue to be progressively a little bit higher each time. And I think that trading around that position, by this time next year, Rubicon will be only the first company since Goldcorp to bring a mine into production in Red Lake, Ontario. That property in Red Lake, Ontario, turned Goldcorp into the lowest cost producer in the business.
And so what kind of timeline are you talking about as far as when it could, how much time, how much money is it going to need to get there?
Well, why it's my #1 pick, George, is because I think that this is the next Goldcorp. And so, Gold Corp's a 5-10 year kind of company you can hold, and buy it when the market for gold is down and sell it when the market for gold is overly bullish. And that's the way I look at Rubicon, because the gold there is such high grade that they'll make lots of. There's a huge margin in mining gold in Red Lake, Ontario. There is no camp in the world that has higher grade gold in it, and these guys are the only company since Gold Corp to turn the green light onto a mine, and they'll be mining here. They're already stockpiling material as they're building.
That's what I want to know. Tell us about what does the production profile look like for these guys?
Yeah, I don't have it on the top of my head, George, but at the start, so they're going underground with the shaft, right? And then they'll go sideways, and then they'll drop it down and send it out the portal. And they're already stockpiling material from that process that will be, once the mill gets into production, it will be processed. So they're getting ready to start, putting material through there by the summertime.
I've got if everyone can see that, I just pushed up the 10-year chart on Rubicon, and you can see that when in its heyday, and it did it between 2010 and 2011 here, it hit $5 and $6. So you're able to pick this. When you look at the long term, relatively speaking, you're getting a ridiculously cheap stock. Now you can say that about a lot of companies, but that's where Allan comes in with the fundamentals.
Yeah, because there are
1,000 companies like this right now in the mining space. But if Allan says it, I don't even doubt it. That's
George. I've been, since the late 1990s, there's only been one mining company bring a mine into production in Red Lake. It was Gold Corp. And
now, why is that though? To play devil's advocate, if you were telling me, hey George, there've been 3 or 4 or 5 of them because it's so prolific, and I'd say, okay, great. So this is going to be number 6. But when you're telling me only one, why is that? If it's such high grade, how come others haven't been able to have mining success?
Okay, well, so George, can you see my cell phone? Okay.
Yep.
You can see my cell phone, right? Mm-hmm. So if a high grade discovery is my cell phone, if a low grade discovery is my cell phone with high tonnage, this camera is a high grade discovery we're looking for under the ground. Okay. So it's like we're looking for finding a deposit. Any deposit that's mineable is like looking for a needle in a haystack. This is like looking for a needle in like 10 haystacks. But why you want to look for those needles is because if you find those needles, you got what we call a jewelry store underground. When you start,
and they found it.
They got it. Thousands of meters of drilling.
So where does it go? If you had to project the future net present value valuation, where does it go?
I think they'll be the next Gold Corp. So
stock price. So share price wise, based on the material.
Right now, Gold Corp is a multi-billion-dollar market cap company, and Rubicon's like a $300 million company. You throw some numbers around there.
I'm getting the number out right now. Yeah. Market cap $485 million.
Yeah. So I think they could grow into a multi-billion-dollar company.
So you're talking between 5 and 10x from here.
Yep.
What kind of cash? What kind of gold costs are we looking at?
Oh, buddy, they can make money at probably $900 an ounce there.
All right. That's important to know.
Lots of high grade there.
That's important to know.
High grade.
So we're gonna hold. So you're gonna be expected. I'm gonna hold you to it. That not every week. We don't want to. It's a long-term thing, but every couple of months we're gonna talk about Rubicon and see where it's at. But it looks promising from a technical point of view. It just has never been able to break through this level for years. Back when the crisis was starting, it hit a low of 66 cents. But then right in the middle of the crisis, I'm talking November 17, 2008, it couldn't break through $1.03. No, sorry. By December, it got as low as 91 cents. All right. but that's in the middle of a storm. And then from there, I mean, look at that growth. I mean, that's just the unbelievable part. Look at just when things got worse, when the stock market was crashing in March of 2009, they had already doubled, and they're on the way to some great success. So the point is, if I'm looking at this from a trading or investing point of view, and remember, you can't take anything what Allan and I say as investing advice. We're just telling you what we see.
Well, it's not even advice, George. It's ideas and it's our concepts. It's nothing more
that's
than
all.
that. It's our opinions.
At home, if you're at home, you can't go turn to your spouse and say, "Honey, George and Allan say Rubicon's going to be the next gold corp. We're going to sell the house and put it all into Rubicon," because you got to do your own due diligence. You got to talk to your own advisor. But what I'm seeing is, if it was able to withstand that kind of pressure during those terrible times, it just looks like it's a great risk reward. Nothing is guaranteed, but the risk reward is massive.
It's a real thing, George. They've got a real deposit there. They're building a mine there. It's going to be in production. It's in the best gold camp in the world, and they've got a great discovery there. Tons of high grade in there. It's going to make them a very profitable mining company.
And if I had to peg the risk reward on this over the next 5 years, not the next 5 weeks, I would say, 35% of the downside, because it has shown it can get, into the 65, 70 range back then during the beginning of the storm. All right, so I'll give it that. You're talking about 30% down, 500% up. You have to take those odds every time, because you don't get any better a risk reward profile than that. You can never get this is guaranteed. Something can always go wrong.
This is why it's my #1 pick, George.
All right. If it's your #1 pick, I got to tell you, I jab you a lot. I kid around with you. I make a lot of fun. We jab each other. But if you say something like that, then I'll tell you right now, I'm probably going to go start and I'll probably go buy 10, 15,000 shares tomorrow and let it sit there. Just forget about it. Just absolutely forget about it and let it sit there and see what happens until you tell us or you tell me otherwise. All right. So
I know you're getting kind of close on time here, George. But before we leave, I'm assuming that a lot of people want us probably to talk about fission. I've talked about the company a lot, FCU. Do we got a few minutes for that, George?
Yeah. That's because we said we want to finish off with fission uranium. Let's take about 3 minutes and tell us about fission uranium in 3 minutes.
Okay. So fission uranium has one of the most, I've said it multiple times, that they have one of the best discoveries of high-grade uranium in Saskatchewan that I've seen in many, many years. And I think in the last few days they kind of confirmed that. What they did is they put out a resource estimate of what they have, and if you take the inferred and indicated, it's over 100 million pounds of uranium. Now, with 100 million pounds of uranium, I did my fast math, and my fast math is I put $40 on that price. So you multiply 100 million times 40, it gives you a $4 billion market value. Now, a reasonable valuation for a publicly traded company with an asset like that is somewhere in the $400 million market value. And that's just in market price, okay? That's a reasonable trading price. So I said that I thought that the price was about 20% undervalued when I saw the news release. It's since come up about 20%.
But and market cap, market cap is actually $440 million today.
There you go. So it's come up and it's moved up nicely.
Okay.
But I really want to stress that I see a difference between a reasonable market value call on a publicly company that's currently trading and a takeover valuation. Okay? On a takeover valuation, because of the margins that are in this project and because of the low cost of bringing it into production, it's almost right at surface, George. So you're able to open pit mine high grade. Open pit mines are always for low grade. You can open pit mine high grade. So your CapEx costs are way down, your operating costs are way down, your profit is way up, okay? In a takeover, it wouldn't shock me to see 100% from where it is now.
Really?
Yes. I
All
could
right.
see, for an asset like that, it
Over
wouldn't
what
shock
period, over
me.
what period of time? You've
Over the
been
next
great at calling takeovers before. So is this a year away? Is this 5 years away? When do you think Fission gets taken out by some
Oh,
of the players?
sorry, there was two catalysts. One catalyst that ups valuation is if the price of uranium goes up. So say uranium goes up to, I think I got two catalysts that'll
And it's
cover my
supposed, and
ass.
it's supposed to, by the way, it's
Right.
supposed to because of all the things going on the supply side, the dwindling
So,
supply.
George, let's say 6 months from now we can talk about $55 uranium.
I don't know. You
Now,
tell me. I'm gonna
well,
search something
no,
while
I'm
you're.
throwing that number out there. Now, if we do that, the valuation is very cheap. This is cheap, cheap, not reasonable valuation. So I'm trying to evaluate where we are today when I give that reasonable valuation, the price of uranium today. But what I see coming is a higher price for uranium will increase the value of what they have in the ground and also the potential for a takeover. I think that this is a near-term takeover. Near-term takeovers to me mean 6 months to a year.
Really?
Yes.
Okay. All right. I was about to
And
look up.
the strange thing, as it is, George, if I was running a major, I'd be looking at to do an offer right now. But then what'll end up happening is they'll probably wait till uranium prices are going up, the stock's much higher, and they'll pay a higher price tag. But that's just me. I like to buy things when they're cheap.
All right. What's the downside? What's the risk? And what happens if they
The
don't?
only
Okay,
risk for
if they
this,
don't. So here, let me play devil's advocate. They don't get taken out. They're fairly valued right now. Am I sitting on dead money unless they get taken out?
no, these guys could build a mine there. It's low cost. It's right at surface, man.
So they could do it themselves.
Yeah, yeah. You can bring in
So actually,
James
just
Clifford. There's a
potential
lot
holding
of
them.
George. When you've got those kind of margins, it gives you lots of opportunities.
All
When
right.
you're
So
tight, when it's tight, when the economics are tight, you got no room for error. These guys got big room for error.
all right, Rubicon and Fission, two big calls by Allan for the long term, and you've got me picking USO for the short term on a rebound in oil based on the falling U.S. dollar. So we got a double it. We got two catalysts there. Tune in next week, but before then, make sure you watch Allan on Friday on Sun News Network, and then make sure you come and visit us for everyone in Vancouver or who's going to be at the Vancouver Resource Investment Conference on Sunday and Monday at booth 1811. Allan, great show, and everyone at home, thanks for joining us. Have a fantastic day.
Yeah, thanks a lot, George. It was a great show, and if you come to the show and you watch my talk, no tomatoes allowed, okay? I don't want to have to drop the gloves and come out into the crowd. No, I love George. You know me. I love to talk about stocks. I love to talk about the market, and I love to talk to people that are checking out our content. To talk with them about that. They're the people that have been following my stuff for a long time. I've been a big proponent of Canadian diamonds mining, and I'm going to have a chance to talk about it. So join me then. Watch the show for sure on Sun News Network because I want to make sure that they want to keep me coming back there with my smiling face. See, George, unlike you, I can't rely on good looks, eh? It's all up here for me. On that note, everybody have a great day.
All right, man. And by the way, just for everyone who's not going to be in Vancouver, Allan, just a quick yes or no. They're not in Vancouver. They live anywhere else but Vancouver and can't watch. Are you going to webcast that presentation on diamonds? It'd be great if you could put the slides up on the web and do a quick voiceover because I think it'd be really helpful for everyone who's not in Vancouver sometime next couple of weeks.
Any chance you're going to have a camera with you out there? Oh, in fact,
no, I won't. But the problem is, even if I did, I wouldn't be able to catch the slides, right? But you can always from home play the slides.
You know what, George? In these panels, you don't really use slides, right? It's too.
Oh, that's right. That's
too much, right? To try to coordinate everybody's computer and whatnot.
Well, they do it. Then for everyone at home, the Cambridge people actually tape all these panels. So
we're off to the races then. Perfect.
Fine. But if you're in Vancouver, get there.
Got it.
See you guys.
I'll be there.
See you in Vancouver, buddy.
Au revoir.
Bye.